Hi, everybody. I apologize for my voice. I came down with a cold at the beginning of the week, which is untimely. Um, but yeah, we're going to be talking about Tinka, and really Tinka is about one major asset, which is the Ayahuasca project in central Peru. And Ayahuasca is discovered in 2012. Originally, this was a silver deposit on the project. In 2012, they found zinc, and through various drill campaigns, now it's grown into one of the biggest undeveloped zinc resources within a junior. So currently, there's about 7 billion pounds of zinc in the ground on this resource. Um, if you don't follow zinc currently trades at about $1.12 per pound. So in terms of value, at least in the ground, you're talking $7-8 billion of value, and also some potential or significant silver potential there as well. So far, in the past 4 years, the current team has been focused on expanding this resource, which was a major discovery. And then for the first time, we did an economic assessment that we put out in July of this year. It showed that this has the potential to be a top 5 zinc mine in Peru, which is significant because Peru is the second biggest zinc producer in the world after China. But yet the capex on the project is quite reasonable at $262 million, and that's because there's excellent infrastructure there. The after-tax NPV using an 8% discount rate was $363 million, and that gave us an IRR of 27%. So attractive economics on the project, although as you'll see, we think we can do even better. There's also the Colquipucro silver zone, which has about 18 million ounces of silver. That was not part of the PEA, so that could be a separate project as well. Just a little bit on the company. So we trade on the TSX Venture, as well as the Lima Stock Exchange and the OTC. We have 265 million shares outstanding. And the current market cap is about $40 million. Cash-wise, we had 8 million in the middle of the year. Currently, that's about 6 million. And so without drilling, we can make that last for some time. We have very good institutional shareholder base. Sentient, which is a private equity group out of Australia. They own 24% of the stock. The IFC, which is a part of the World Bank, owns 11%. Then we have some other investors like JP Morgan and other European, North American funds in there as well. Analyst coverage from 3 Canadian brokers at GMP, Canaccord, and Industrial Alliance. The team is headed, it's very much a exploration geology focused team, and very much focused on Peru. The majority of the team is actually based in Peru, but it's headed by Graham Carman, who has a PhD in geology, has spent the majority of his career in Peru looking at various projects, but a lot of zinc projects. And then before that was with Rio Tinto. The exploration team is headed by Alvaro Fernandez Vaca. He is Peruvian. He's worked around the world, but he's based in Peru and heads a team there. I think it's worthwhile to touch on a little bit about zinc. Zinc was one of the favored metals in 2017 and the first part of 2018. Prices went up significantly, and that's because there was a supply shortage. China is the biggest consumer of zinc, so they account for about 50% of all demand. And so given the current trade war between China and the US and some slowing of growth out of China, we have seen demand for zinc take a bit of a hit. And so prices have come down. In the last about a year and a half, prices have declined from a high of $1.65 to about $1.13 currently. But what you'll notice on the right-hand side of this slide is inventories continue to decline. So inventories have been dropping since 2013, and we continue to see that trend. So what we believe is, even if demand doesn't pick up, and we do expect demand to pick up, whether this trade war gets settled or not, but even if that doesn't, there's just a lack of new supply in the pipeline, and so we think this project fits very well for production in the next few years. Let's skip over a couple of these slides. So this shows the resource growth, with the blue circles being the inferred resource, the red being indicated, which is a higher certainty, just because of drill spacing. But what you can see is basically over the last 4 years, the resource has grown fourfold through drilling. In the process, the grades have also increased, and in large part this because of a discovery at a new zone in 2016. As a result of that drilling, we now control the biggest zinc resource within a junior. And so I think that's very significant, both in terms of the value within the company, but also I think it makes it an attractive takeout candidate. That said, the valuation is very compelling. This was done when our share price was 25 cents. It's currently 15, so the metrics are even better. But relative to other zinc development companies and zinc producers, it's, the valuation is very low. As I mentioned, we did a PEA that we put out in July. So that envisioned an underground mine with a 5,000 ton per day plant, 21-year mine life, which is significant, but quite reasonable capex of $262 million US. The pre-tax NPV was over $600 million, then after tax it was $363 million with a 27% IRR. Just put some numbers around that. If you look at the total cash flows over the life of mine, pre-tax it's over $1.6 billion, and after tax it's over $1 billion. So this is a big mine. Within the PEA, this is a sensitivity chart. So it just shows if you adjust various factors, what happens to your NPV, with the base case being the black line, which is $363 million. But what we want to highlight here is if you increase the zinc grade, because obviously we can't control the price, but if you increase the zinc grade, let's say you increase it by 20%, the NPV actually goes up by $200 million. The reason that's significant is based on the drilling that we've done this year, we've hit some very high grade zinc zones. So we actually think the resource grade is going to go up. And what we're currently thinking, given the price weakness in zinc, is we're looking at potentially optimizing the PEA based on the new drilling to see if we can take the PEA and make the numbers even more robust. In the process too, because of the nature of the deposit, the high grade tends to be in the thicker zones. And so potentially we can reduce the mining costs just by focusing on those zones as well. And obviously reducing the operating expense will also improve the economics. Just give you a brief overview of the project. So Peru is very much a mining country. You can see on the right-hand side, it's second in the world in terms of zinc production, copper production, as well as silver production, and a significant producer of tin, lead, and gold. We're located in central Peru in the Andes. It's basically a base metal belt there. So if we zoom in on that area, you can see we're surrounded by a number of mines, and because of that, the infrastructure is very good. We have road access to site, and there's a lot of mining expertise and all the services you require to build a mine. This, on the left-hand side, you can see the claim boundary that we have. We have about 170 square kilometers, but so far we've really been focused on less than 10% of the project, and that's what hosts originally the silver deposit, which is called Colquipucro, as well as now the zinc deposit. And underneath the zinc is actually a separate deposit, and that's this pink hashed area, and that's a tin resource. Now the PEA we did only focused on the zinc, which does come with some silver as well, so it didn't take into account the separate silver resource nor the tin. So this is the current resource prior to this year's drill program. So what you can see is in total we have an indicated resource of 11.7 million tons, another 45 million inferred, so a total of about almost 57 million tons. what we want to highlight here is we have 4 separate zones called South, West, East, and Central. But the key zones really are South and West, which make up the indicated resource. And what's important to note is the grades. So 7.6% zinc in South Ayawilka. The inferred portion is even higher. And then as you'll see this year, the drilling we did is even higher grade than that. And then West also is about 6.5% zinc. So we're looking at potentially optimizing the PEA to focus on these zones as opposed to Central and East, which are closer to 5%, to further improve the economics. The reason that's significant as well, so this is a long section through the deposit, and it's a carbonate replacement, so the carbonate being limestones, which is this blue rock here. So this is the deposit. It's about 2.5 kilometers from end to end, but the best portion of the deposit is South Ayawilka, and then in behind this is West Ayawilka. So these are the high-grade zones, and they're also very thick. So this is approximately 150 meters thick. So you get the best grade, the easiest to mine. From surface at the top, this is about 125 meters. So this is very, as an underground mine, it's very accessible. Just put a ramp in through the side of the hill. You do bulk mining on this and extract it. In terms of infrastructure, we've got power lines right across the project. There's road access, as I mentioned. There's plenty of water as well. And we've got very good community relations. So I think as a potential mine, it certainly checks all the boxes. So the last thing I'll focus on is the drill results from this year's campaign. As mentioned, we have a resource that's about 7% zinc, but what you'll notice here is one of the most recent holes we drilled, which is at South Ayawilka. Collectively, there's about 80 meters that was intercepted at roughly 12% zinc. So this is the type of material that we want to get after, and this is the reason why we're looking at optimizing the PEA. These are very nice grades, very nice thickness, again, close to surface, so easy to mine.
2 minutes.
Okay. So this is really what we're doing next. We've done the PEA, but we're looking at optimizing that, making the numbers even better. Until the market improves, we're going to do some targeted drilling, some exploration. Then beyond that, pre-feasibility study with infill drilling, feasibility study, and potentially production in 2023, which is market dependent. Just to touch on the silver deposit we have as well. As mentioned, it wasn't included in the PEA, but we have a separate deposit. It's about 18 million ounces in higher grade. It's right at surface. It's open pittable. So the higher grade material sits in the red colors here, surrounded by a lower grade halo. On its own, right now, we don't think it's not viable as a silver mine, but if you build a silver mine, certainly there's value within that. Really not reflected either in the PEA or in our share price. Community relations, regardless of where you are, it's always very important. Where we are, we don't have any communities on site, but we do have 3 communities around us. It's community-owned land. We're the biggest employer in the region, and we certainly put a lot of time and effort into community relations, and I think that's going to pay off. So we have a good social license. We're guided by the IFC as well, which is an 11% investor in the company. And potentially there's excellent opportunity for us to help the local communities. So just in closing, the biggest thing is there's scarcity value in this project. You don't often get a project that has size, grade, infrastructure, and is in an ideal location like Peru. So we have that. We have full ownership. We own 100%. There is a 1% NSR royalty, but we can buy it back for $1 million. And we have a low valuation, so I think it's a good time to buy Tinka. Zinc prices will come back, but even if they don't, we think this is one of the best development projects in the pipeline, and we still have cash.
Well, thank Thank you very much, Rob.
Thank you.